talk about the real problem. Most businesses fail due to poor cash flow management. The surprising part is that making money isn't the problem. It's how the money flows that decides the success of the business. Did you know that 60% of businesses in Australia fail within the first 3 years? And in the first year, 20% of those 60% fail. And so how do we fix it? We start with cash flow. So let's talk about this. Cash flow is something that a lot of us know we need to wrangle, but find it super difficult to get our head around. We are here today to show you that there is an easier way to do things, and we've got the steps to help you figure this out, whether you do it on your own or with support. So the first is setting the foundation. All of the big decisions are made based on your bank balance. You're human after all, right? I know I look at my bank balance and make decisions. And did you know that banking provided very little utility for small business owners, making it super difficult to do everything that you need to do as a business owner? And making the decisions based on this bank balance in one account will kill your business because you can't make good decisions based on one bank account. So what's the solution? Set up multiple accounts. Now, this may seem super simple, and it is, but with how difficult banks can be, setting up the multiple accounts can be lots of hard work and such a headache to get set up. That said, Friday makes that super easy, or you can use any bank to be able to do this. So what do? We set up multiple bank accounts, and each bank account has a purpose. That's right. Instead of one bank account, you have multiple bank accounts where you can know that the purpose for this bank account is revenue, for profit, for paying yourself as the owner. The idea is to regularly allocate money to this specific account so that as all of your money comes into your revenue account, this then gets distributed to these different accounts. And as a rule of thumb, we recommend that you set up a revenue account where its sole purpose is to just accumulate that revenue. A profit account, because what you focus on first is what grows. An owner's pay account so that you know how much money you can pull from your business and pay yourself. A tax account, because some of the money that you earn just isn't yours and you don't need that headache when it comes to dealing with the ATO. And of course, last but not least, the operating expenses account. And this is where all of your expenses to run your business come out of. Now, you can do this manually by determining the percentages for each of these accounts, or you can use Thriday, where you can set up to 10 bank accounts in literally a minute. And it allows for the multiple percentages, and you can really tailor it to your business. So if you can get on top of your cash flow and make this easy for you, it's going to be so much easier to make a decision. Setting the foundation for success is absolutely key. Step 2, to get paid as fast as possible. We can't do much with money if we're not actually receiving our money. And so here are some things that you can be doing to ensure that you get paid fast as possible. The first is to send quotes as soon as possible. I know this seems really, really straightforward, but did you know that most business owners or anyone that works in a business tends to really take their time in sending out that quote or that proposal? And it stops people from wanting to work with you. It stops them from paying you. So get these out. It's a competitive advantage because no one actually does it. The second thing is to send invoices before the work is done. Did you know that 10% of people will actually pay before the due date? So take advantage of it. The third is to follow up invoices relentlessly and ideally automatically. I know that a lot of people shy away from this, but if you don't focus on what is owed to you, that people will take their sweet time paying you, and you don't want that. The other thing is to consider incentivizing early payment discounts and penalizing late payment. Money is important, and here's the thing. Make sure you price these into your contract terms. The additional 10% you earn from people who don't pay early is cream. And did you know that even a 2% early payment discount incentive can be enough to move the needle and make sure that people pay you earlier? The other thing is to consider delivering the final work after you're in receipt of the final payment. It's often in that last piece that people tend to be chasing and not getting that money. And of course, don't make it personal. Automate the follow-ups from an accounts email, for example, or with automation. I know that it's hard when you've established a relationship with a customer to then follow things up. So don't make it personal. Step 3 is to keep expenses in check. We've looked at cash flow, we've looked at income, and now we have to look at the expenses. And I have 3 R's for you. Remove, reduce, renegotiate. What does this mean? This is something that you can do on a regular basis that will keep your expenses in check. You can look at your expenses and go, can I remove it? Is this something that I'm paying for that I'm not really utilizing? Am I getting that return on investment? If no, get rid of it. The second is to reduce. Maybe there's a better option in the market that you can pay less for the same outcome, or maybe you can not pay for it every single month if you don't need it and just pay for things as you need, reducing that expense overall, or renegotiating. And this is the most underutilized option that business owners have. You get to negotiate. You could ask for a different payment plan. You could consider a different scope that gets you the same outcome and you pay less. It could mean that you pay things differently. Having the conversations often leads to better expense outcomes for yourself. And here's a little hot tip. If your operating expense is growing, then you're on track.